Global, Mr. Global. Oh, there you go. So welcome everyone to this what I'm using for the best traders tools working today, and I think that's kind of important. What are we using? This is October 23rd. It is a Thursday. We did a TradeStation event in the morning, as I do every Thursdays, the morning briefings, and they're recorded. So if you did get not a chance to see it, we'll go through some of my favorite tools, one of which we use today, talking about, believe it or not, the soybeans and the ag sector. And typically we see a basing, bottoming action there in that. And one tool we used was Commitment of Traders Report, which shows, and we went through an extensive study today, and I want to share that with you as well, because it's a very powerful tool if used correctly, and that's what the key is. What tools are out there and how do you use them correctly? And if you're not a commodity trader and you don't like soybeans, you know, what I brought to the table as a co-author and editor of the Commodity Traders Almanac when we were doing that with John Wiley and Sons is I said, you know what? There's about 30,000 people trading commodities. There's probably about 300 million people trading stocks, and there's a lot of stocks that are highly correlated to the underlying commodity market, as well as now, since 2005, or actually since the late 90s, when they had the creation of the exchange-traded funds on the spiders, the Qs, the diamonds. Those were the first big ETFs that they had introduced. We started to see in 05 more and more, and actually in 04, 05, when we started to see the advent and the increase in popularity of exchange-traded funds with GLD. That was an exciting one when GLD came out, SLV, Silver and Gold ETF. Then, of course, we had the currencies with the FXE. One of my books many of you are quite familiar with, a very popular book written over a decade ago called Candlestick Pivot Point Trading Triggers. In the first chapter, I talked about how to utilize commodities or Forex markets. Instead of trading the commodity or Forex, use some of the data and the analytical tools that we get from these commodity markets and how to apply them in the exchange-traded funds. So there's something there that we can learn and utilize to give us an edge in our trades from the commodity industry and apply it to stock and stock ETF sectors. And one of the markets that we talked about, in fact, in that book, in the first chapter, there were some stocks that we had like BOT, which is the Chicago Board of Trade Holdings, which of course Board of Trade was bought out by the CME Group. We talk about the birth of ETFs, and I talked about looking at markets like the FXE. And the FXE, I said, listen, this thing is like Swiss cheese. It's just, you know, gap, hole. It's not really a product that you can really trade and analyze effectively, but if you utilize the futures industry's data and apply it towards your analyzing the futures information and apply your trade in the ETF, you can take bigger trends in the market. I was one of the innovators in that style of market analysis. So with that said, I hope that didn't come off that I was bragging. I was just illustrating that there are, for all stock traders, if you open your, just be a little open and you know, be willing to learn. There's some great tools out there, and one of which, when I also have given many presentations for TradeStation at various expos and private events, and I've also said and taken a poll, and I love my most famous one was when I did, I think it was in 07, and it was in San Diego, and I asked the audience, how many people are interested in soybeans? And nobody. And I mean, this probably had 650 to 700 people in this packed room, a big grand ballroom, and 3 people raised their hands that were interested in soybeans, and I was one of them. And then when I asked how many people are interested in potash, everyone raised their hands, because if you remember back then, potash was the big mover, CF, Terra, all the fertilizer. And I said, well, this is actually the worst time of year to be trading the long side of those stocks, because they're highly correlated to the underlying market from our analysis and technical work to soybeans. Soybeans has a seasonal tendency to peak on or about the 4th of July. The stock, I think, potash at the time was trading around the 240 level, and within 6 months it was trading at around $40. So it was something that I think it caught a few people by surprise. And so today's presentation, I want to just fast forward to what we discussed today, was looking at the Commitment of Traders report and what it revealed on soybeans, and then what stocks kind of One that's highly correlated is John Deere, for example. Monsanto. John Deere just gapped up and took off to the races today. You have Monsanto, MON, and it has already seen a nice little move over the last week, and we'll get through that in just a minute. So there's some tools that we're going to talk about today, how you can get them off of TradeStation and use them very effectively. First, let me please state that trading is risky, and take a second to please take a read of this. And again, past performance is not indicative of future results. And of course, the information here is of my own, and I would appreciate that people do not take and regurgitate this out. That would be nice. Thank you. And also, just remember that the NFA, the CFTC, the FINRA, and the SEC all want everyone to know that stop loss or stop limit orders do not necessarily limit your losses. If you had a stop in Amazon, you will experience that tomorrow. There's something we call slippage. Now, the topics and materials we're going to cover today, some of the timing tools that I use, the consensus contrarians, how you can get that, some seasonal analysis, and I have some charts for you and some cycles, how to scan for opportunities, and how we let TradeStation use it, and what we can utilize to maybe give us a better trade concept. Some comparative relative strength. My favorite for trading stocks is looking at some of the market internal analysis, and of course one of my favorite indicators is Person's pivots on multiple chart patterns. We'll look a little bit on some of this stuff, some of my setups, and that's what I kind of am going to try to work with you guys today with. All right, next, I know there's a lot of opinions in the market out there which way it's headed, and of course we were and one of the things that you can go back and you can look on our website that we do, which is more of a customer and a trader general public appreciation. If you go to our website, which is personsplanet.com, the first thing you'll see is all these tweets and some of these tweets on the side. If you go, the neat thing about Twitter is that it's time stamped. So we actually have some, like today, day trading. I had a little signal. The market was probably about 42 seconds, maybe 30 seconds late, but it was close enough to the number before we saw a sell-off. We had a nice trigger to sell short on the ES. Soybeans, of what we talked about this morning's presentation, in case anyone didn't follow, soybeans were only up about 3.25% today. They had a huge whale of a move. And there's some other things that we've posted in here, like our trading. This is like MGM. We like the stock, and this is actually from the old days of MGM's the lion cage. If you guys ever went out to MGM, the lions are the cage is gone, and the lions are off in probably one of the best lion safari resort hotel type retirement centers for lions, I guess, is what I've been told. But anyway, you can go back and you can see these tweets, and we come up with a lot of different great ideas. What we were doing with the low in the market, probably one of my favorites is to go and look at some of the tweets just as a public service, is to go back and say, well, what were we thinking back in last week when the market was crashing? One of the things we are going to we did was, in the tools we used, was to make some great decisions like IWM calls. If you look at this on October 15th, and you can go back and expand on that, I think we should. One of the things that we were looking at is on October 15 was to buy some of the January IWM calls as a stock replacements, and I wasn't the only one thinking of that, because the 110 strike had about 19,000 volume, and that was done right around, I think, 2 in the afternoon, but well before the market. So we had some really neat stuff like Twitter and Triple D. This is back on October 15th when the market was making lows down there. And then we also came in with the idea from September to be into a lot of puts in the market. And what we were doing is we had a profit target in the spiders at around 185. So there's some really neat things. These aren't, a lot of this isn't done after the fact. It's actually done before the fact so that we can, in fact, here, Spider on October 15th. My spider target is 185. So that was where we were looking at covering, which we did our put options when the market opened up. Of course, we should have held another couple hours, but neither here nor there. A lot of good stuff is in those tweets. So if you're interested, you can look at those. I don't tweet what I eat at night and what movies I see, but I do it more for customer service and appreciation than anything else for a lot of our students in our trading room. So with that said, there's something there for everyone. I think my whole thing in my career, and for those that don't know me, I started on the floor of the CME in 1977. George Lane, I worked for George. He created this indicator called stochastics. I worked for George for 2 years, from 82 years. I've been in every facet of the business world and of trading in the markets, created some indicators which are very popular, the PPS indicator and, of course, Person's Pivots. I think one of the things that I was always taught is if you have good analytical skills, then you can just apply the right strategy. I started trading options, by the way, as they were first introduced on Treasury bond futures. And that's where I migrated my career into, was trading in the financials. And then I learned how to leverage my leverage by using options, managing risk, and being directional. So I was taught good analytical skills, and I was able to apply that and use directional strategies on Treasury bond options. And so back in those days, in the mid-early 80s, when interest rates were going down, bond prices were going up, it paid very handsomely to be in the markets in those days. So I had a lot of experience, obviously, in options and trading in the markets. And so now with the advent of more internet, the computer world, it's just been, we have probably one of the best trading, I think, not just tools, but ways of execution than we've ever had in my 30-some-odd years in the industry. So with that said, I still use the exact same techniques today as I did way back then. I just have a different way of delivering that information to me. As far as entering, once I get all my ideas down, it's like, how do I get into a trade? I don't, just to let you know, I do not get into a trade by simply putting it all in, unless if I'm a day trader, I get all in and I scale out. If I'm a position trader, there's two things that I do. I like to kind of get into trades not just through price, but also through time. Remember, a chart, we have two axes, time and price. You buy some on, if you're looking at a longer term trade, and I'll get into this in just a second, you might buy a few, get long a few on Monday, which is the opening of the week, and buy some more on the close, which is the close of the week. So on a weekly chart, you're not getting the best price possibly, but you're getting the best average price. And the same goes with exiting as well. I use a snapback approach we teach to the moving averages. Many of you guys are my students already in the room. You just lingered in the trading room for listening to this, and I thank you for that. But, we look for snapbacks to moving averages. We also use stop-in entry methods to let the market take us into a trade. And then I use a combination of both, and of course we use option strategies. So the tools I use, probably too many, except for the main ones I use are my buy and sell triggers, and moving averages. They're easy to scan for conditional changes. I use my candle pattern, my high close, low close doji, because it's easy to scan. I use my Person's Pivots to define not just the trend direction, but also to determine support and resistance in most time frames. And the time frames I use are not just daily, weekly, monthly, but also option expiration and quarterly. That's right, option expiration. So instead of looking at a calendar month from month to month like January, February, March, I look at the third week of the month, which is where options expire typically. And then that would be the option expiration. And I also utilize what's the quarterly, financial quarterly, January, February, March, that's a quarterly. Then again, you have April, May, June, that's a quarterly. And then right now, October, November, December, we're in the fourth quarter, and so I'm looking at the quarterly pivot support targets. We got some very interesting setups that I want to share with you in today's presentation, by the way. Of course, chart patterns, what a head and shoulder is, a failed head and shoulders pattern, wedges, channels, etc. seasonals because, well, I pretty much wrote the book for seasonal analysis with the Commodity Traders Almanac and my long history in the markets. I do look and utilize volume, but I use an indicator, and something I think is here for everyone today. If you guys, for those in the room who have struggled with volume, in other words, you've seen the market trend higher, but no volume, and it spooked you, and you said that market's not sustainable because there's no volume, I've got an answer for you today. I look at this exclusive indicator we created, which is exclusive with TradeStation. Relative strength analysis. Some of you may consider or heard it called pairs trading or spread trading analysis. Spread analysis. We use relative strength analysis. And then the one I want to share with you also today is the commitment of traders. That's what COT data stands for. We're able to use that for futures and apply it with not only FX, the foreign currencies, but stock indices and bonds. So if you're trading natural gas, if you're trading soybeans, if you're trading an ETF called the DBA, cow. Cow has to do with the eggs on the meats and specifically live cattle. And moo has a lot to do with the agricultural stocks like John Deere, Monsanto, etc., Bunge, and Archer Daniels Midland. And then my most favorite for looking at the stock indices is breadth analysis, which I share almost religiously every Thursday at TradeStation, just to give people an idea of what the top stock indices are looking like as far as a breadth perspective. All right? So I think one of the things that professional traders know is that not every trade is going to be a winner. And despite what, and I think it was kind of cute for me because I'm always getting emails and I'm on God knows everyone's list and everyone's making money and everyone's called the top and everyone's, it's just, my email says it's how much money everyone makes. That's all I'm joking about. I'm sure you get the same ones. But I think not all trades are winners, and that's a fact. The best analytical tools that we're going to share with you today, they're not going to insulate you from a loser. That's just the way it is. But even a great detection system, as I call it, or an indicator system needs to have a great profit factor. For example, a system that's, we talked about this in a seminar that we did down here in Singer Island a few weeks back, or last week actually. A system, just a very basic generic system, 47% profitable. People say, are you crazy? This thing, you're telling me it's less than 5 out of 10 trades is a winner? And, that's kind of not good. But if it has a profit factor greater than 1.2, it's a winning system. This is a very elementary trading system in a result, very short-term time frame. It's a 15-minute chart on the ES. This is just a little performance graph with a slice of both buys and sells, and just shows you it's over 300 trades, by the way. I mean, very elementary system. It's still profitable. I mean, that's the equity curve. I mean, it's not very smooth. I mean, you go up to almost $1,200, $1,500 profit and almost give it all back, and then the thing zings back up, and then, it goes in a downdraft. But it just shows you that it's not making a smooth curve. So something has to be implemented to make this better. We all see that in this trading curve. But let me share with you why, just so that you know, as a trader, you have to be faced psychologically with acceptance of losses. You can get a system that is, I'm not here to sell you a system. I'm just sharing with you why we look at trading system results. That's what this slide is all about. The percent profitable is 47%. That's horrible. But wait, the system is profitable, and it's only doing a one lot on the E-mini S&Ps, and the count size required to day trade it is $1,800. So in a short period of time, it is actually done quite well in more than doubling the account size as far as profitability, but it's only 47% accurate. Why does this work? Because it has a profit factor of 1.23%. The profits are greater than the losses, and that's so that you understand you're going to have a lot of trades, and you're going to have a lot of winning trades, and you're going to have a lot of losing trades. But But you've got to understand, as a trader, you've got to manage the risk. And another thing is you can look at, and it's an old adage, we've been saying this in the trade. I've been saying this in the trading room for the last couple of days. Listen, we had a really hot last couple months, and I always, as a trader, not to be a doubting Thomas, but it's like, because I know there's going to be a drawdown eventually. It's like, when does it come, right? Because not all trades are a winner. When you have so many trades in a row that are winners, eventually, like if you had 7, by not saying that the 8th one this time around is going to be a loser, but generally the norm is a trading system will help you identify your strengths, your weaknesses, and how many losing trades in a row does it take before things turn around? What's the average? So identifying, one of the things about TradeStation is that it's not just an executable platform, it's just not an analytical platform, it's also a backtesting strategy platform, which is really cool. But again, you're only as strong as your weakest link, and that's ling. It should say link, obviously a typo, in the chain. So don't judge me on my spelling. Please judge me on my market analysis techniques. I think you'll find I'll be a little bit better there than my typos. But as you say, as they say, you're only as strong as your weakest link in the chain. So by identifying the weak link or the chink in the armor, it'll help you to determine when to override or improve a trading method. More importantly, it'll help you understand that not all trades are winners. And so you have to be able to ride some of those drawdown periods. Now, what helps us make better trade decisions? The first and foremost one is by a small report called the CFTC Commitment or Traders Data. Now, on our website, you can find the this, and I'm going to go to our homepage. There's several ways to find this, and I strongly recommend that you take a look at this. So if you go to our website, which is personsplanet.com, so I talked to you about the tweets. You got that. If you go over here where it says tools, the first thing up there is COT report. You also have instructional videos. You can look at a lot of things. All these videos that we've ever done and put together doesn't require passwords. You can just go see them. But anyway, we get back to COT data. Click on Get Report and scroll down till you find the exchange you want to look at. And let's say I want to take a look at the CME and I want to look at E-mini S&Ps. Well, I got to scroll down. They got every commodity here, the Nikkei, and I scrolled down too much, excuse me, the Japanese yen, the euro, and I want to find the E-mini S&Ps. And here they are, E-mini S&Ps. Why do I look at the E-mini S&Ps versus the big S&P futures? Well, here's your number one technique that I share with people. Is because the small speculator does not really trade big S&Ps. In fact, not many people trade the big S&Ps. Look at the open interest. The open interest is 200,021,827. So the E-mini S&P has a better market participation with 3,715,049 contracts as of the day the report was taken, which is on Tuesdays. So on the close of Tuesday, the data's collected, and on Friday, this will be. Tomorrow at 2:30 Central Time, there will be a new report on our website linked by the CFTC, that's the Commodity Futures Trading Commission, the government agency. They will give us this information, and it gives us 3 categories. Professionals who are speculators, commercials that are hedgers, and then the balance of the positions are the non-reportable small speculators. In the E-mini S&Ps, the interesting aspect is if we go back in history, you could, and I'll share with that in a minute, they were actually long the market, got out, and it was the hedge funds who were long the market that got absolutely clipped in the last 2 weeks. The small speculator, I would love to have seen them come in and gone net short the market, but they're not. They got out of the market and they're getting back long the market right now. And it's almost like a kind of a balance here, because one of the things that I want you guys that we can teach you is how to use this tool effectively. A, you want to look at what the overall open interest is. I mean, because there might not be a very huge amount of large open positions. When we get that, when we have rollover changes from like September to December, we get changes in that open interest number. So what we want to do is look at the percent change of open interest of each category trader, and that's something we've been sharing with people for 30. That's when I've been taught how to use this. So needless to say, that's kind of critical. I always like to look as a contrarian indicator, not to get a gauge of people who have an opinion of the market, but who not only have an opinion of the market, it's better to have a contrarian indicator from people who have an opinion of the market that are actually put money down and have skin in the game. And that's what this report reflects. So it reflects people that are in futures and options combined, and that's what I'm looking at. So therefore, if the small speculator, if they're wrong 80 to 90% of the time, why would I look at the S&P big contract? Who would trade the big S&P? Maybe a local on the floor, a professional trader who doesn't have a huge large account or a huge large position. And that's who might be trading the big S&P 500. So I hope that kind of at least introduces you as to what and where you can get this report and what it reflects in the breakdown of not just the percent of open interest, which is very important, but also the overall net positions. And one other element that's extremely relevant is what are the changes from 1 week to the next. So look at this, from 1 week to the next. So if you look from October 7th to October 14th, everyone can see this. Hopefully you can see this. That's the date. This is when the report was released, and this as of October 14th. Look at this line. Changes from October 7th. It's right there in black and white. You just got to learn to be taught how to read this effectively. It shows that if it's a negative number, that means they got out of 7,000 shorts last week. From the 7th to the 14th, they got out of 7,000 shorts, and they added 65,000 long positions. The commercials, end users, they did the opposite. They added 185,000 shorts, but they also added 114,000 longs. And the hedge funds, they added 32,000 longs and added 34,000 shorts. They're longer than they're shorter. And with the general public, they're longer than they're shorter. So this is as of the 14th. What happened as of the 14th in the market? Market's gone up. So with that said, we look at this as an overall change of trend in the marketplace. Now I want to reflect one other thing that we covered today live before the market even opened, and we talked about one number here is in soybeans, and I want to just share this with you. The open interest in soybeans, 1,258,000 contracts. But look at this lopsided market. Look at this. The small speculator, they were long 59,000 contracts of soybeans. They're short 178,000. We showed this live this morning before the market opened. I said, man, this is a seasonal time where we see soybeans go up, and the small speculators are extremely short. They're almost 3-to-1 short to long. For every one long, they're almost 3 short. That's an enormous imbalance. In fact, here's another number that is staggering. 14% of the overall open interest, the small speculator, was short soybeans. That was the number we gave to people today. And I mean, it's no wonder why soybeans were up 3% in one day. A huge move. So is this information viable? Yes. Is it good for short-term traders? Yes. Is it effective for longer-term traders? Most definitely. And how do you find that? Well, I've just shared with you on the report. This report works for the S&P 500, the euro, gold, crude oil, nat gas, and that's how we share it. Now, one of the things I teach in seminars, and this slide is from a seminar, is that especially if we get a percent change to open interest, especially in heavily traded public speculated markets like the E-mini S&Ps. If we're near 12%, it's a red flag. Coming into October, they were net long about 11.2%, near that 12% number, the small speculator, and that's how we saw the market, a more meaningful correction ensued. Now, this is just a bit of history for you. Back in March of 2010, you had an open interest similar to the numbers that we're at today, 3,784,000. So if people think that public is not trading E-mini S&Ps, we have 4 years later about the same open interest level of contracts today as we did back in 2010. So it's a fallacy to think that people, the small speculators, not really trading in the market. Now, look at this. The interesting aspect is the small speculator, very similar, 11.3%, near that 12% number. They were long the market. They were short, though, 15.6%. Look at this. They were actually a lot shorter, and it was the open interest. So if you just took a look at, oh, well, it's 400,000 versus 591, that's not lopsided, you would think, right? That's pretty close, 427, 591, not a big deal. But they were over 12% short the market. What do you think happened because of what I've just shared with you today? Near 12% is a red flag. Over 12%, it's a baseball bat in the back of your head. This is the data. This is the time frame, and that reflected that they were short at that point in time. And that's the result of the market. So it does pay as an indicator if you're saying, gee, look at this trend. We got a buy signal and the trend's moving up, and then the commitment of trader comes out and you say, can it go any higher? If it shows that the small speculators are really, really short, the answer is yes. One of the things that I've noticed through history is that the speculators, two things, not all the time are they as a group bad analysts, they're just not good money managers, and they tend not to get out of losers, and they tend to finance losers. Ego gets in the way. And they, this market can't go any higher, I'm going to sell. Okay, it's going higher, I'm not getting out, I'm adding, I'm going to wire more money. And so therefore, that's part of the issue with the small specs. So when you see those types of numbers, it can help give you confidence that, hey, the trend is still alive, the trend is up, you got a lot of green candles, you got higher highs, higher lows. I mean, for gosh sakes, and then you find out the small specs are short 15% of the open interest. It's vital information. Now, how does that relate going forward, or how did that relate even now? Well, the funny thing is, I want you to take a gander of this chart here. I love this chart because just to share with you through times of history in the marketplace what the small speculator has done. Okay? This is 2009, the absolute low. Let's go walk through history. This is 2007. Note the trend of the market. I've got three colors, and this is TradeStation, and you can download this yourself. Red is commercials, blue are hedge funds, and yellow is the small speculator. In 2007 and 2008, look at the level, okay, the level of net long positions by the small speculator. Hedge funds and commercials, they were short the market, making all kinds of money riding this trend down. And then all of a sudden the speculators decided right here, that week, let me get rid of all this, too many annotations. Let me draw this correctly with a straight arrow. On the week that the market, there is a straight arrow. Straight arrow up. Note that this week, right here, they decided to go the largest net long position because they felt the market couldn't go any lower. And all of a sudden, the market crashed 3 months later. They decide to go from one of the largest net long positions, and they held that, and then they finally decide to go short. And this is ugly. One of the largest net short positions. Look at this level, 300,000. One of the largest net short positions, the small speculators went right near a person's pivot support. Oh, this is ugly. This was a good story actually for us, but and this blue dot is a buy signal, by the way. They decided to go short on the lows of the entire crash after riding the market down into the abyss of zeroness. Okay? So there is reasonable expectation to watch the trend of what the small speculator does, and that's the power of the Commitment of Traders report. More people talk and teach about watch the commercials, they're in the know, but I like, if you believe in the adage of a contrarian consensus indicator, if the regular retail trader is wrong 80 to 90% of the time, don't you want to follow what they do? With that logic, you want to make sure that, does the general public trade a lot of natural gas? Does the general public trade a lot of, oats? I mean, no, you guys probably don't trade. Who trades oats? Gentlemen don't trade oats was the old floor traders adage. Treasury notes, not many people trade notes. The general public's not really, there's certain markets that you do follow the professionals, but there's certain markets you want to follow the speculators, and I hope you've gained some insight as to why we use this tool as far as looking at the small speculator. All right, so this is this year, jumping ahead. This year in September, so look at September 16th. Look at this. The open interest, 4,360,000. So obviously there is a huge open interest, okay? There is a huge open interest, more so now. So with that said, 4,361,000 as of 9/16. I said 11.2. I was wrong. It was 11.9. The small speculators were near that threshold of being long the market by almost that 12% number. So this was the warning sign that we had. They were net long. So that was pretty powerful information that a correction was coming pretty soon. Does everyone see that? That was pretty key. Then the hedge funds, they were actually short as well. They were net short. But boy, they were also 11% of the hedge funds was actually long the market too. Now, I'm not saying every hedge fund makes money either, because there's a lot more hedge funds now. But when you follow the small speculators, and you can see that the majority of them were actually net long, again, that magic number really gave the clue to look for at least a correction coming in the marketplace. So how does the report, how did it used to work in the old days, and how does it work today? Well, this is how it works. And I guarantee you, folks, I guarantee you, as long as you watch the open interest number, as long as you watch open interest numbers, they'll change. And so will the net positions. But that's why you want to watch the percent number. You want to look at that percent of open interest. The percent of open interest is what's really important in understanding the commitment of traders. Because while you might see the numbers and by just casually looking at it, 517, 304, oh, it's not 2 to 1, but whoa, they actually, as I shared with you, 15% short and the market went up, and they were almost 12% long and the market went down. So there is very strong relevance in watching that report. All right? Now, combine that, and as you see the ES, the weekly, here is the chart, and this is the exact chart pattern that you can see. It shows general public was net long, the hedge funds were barely long, and the commercials were already getting, again, hedging on the short side. So the one group of people that was adamantly short the market, as we had a PPS sell signal, that's what that pink dot is. And granted, we had a nice little trend, and you had, I guess, a longer term trend break, and there's a lot of other things that, people can accurately look back in history and talk about. But the one thing that can't be ignored is what is the small speculator doing in the marketplace. All right? So that is one report or indicator that we like to look at. Another one I like to look at is seasonal cycles. And the funny thing is as we get into probably the worst time of the year in the S&P 500 is generally from August into October. It is the worst seasonal time frame to be long. Now, the best time is, right into where we just passed, which is like about now. You start to see the market up, and then we've got an election coming up, November, first week of election. It will be sort of important to see if there's any Senate changes and any seats changed in the House. But as we get through into December, and then we get that Santa Claus rally. We'll have that Santa Claus rally. And now what I want you, and I know this is probably way too much time to remember, but it should be, if we do get corrections in the market and see maybe, a back and forth, up and down pricing action in the stock market, it's about the first week of December. After Thanksgiving, you get that day after Thanksgiving rally, right? The Friday. Then you got Cyber Monday. But boy, after that first week of December, we should see that Santa Claus rally. And if we do, remember, we typically get the tax deferment sell-off. If the market goes up, what you see is people sell off before the holidays. They liquidate their losers. So stocks that are down on the year tend to stay down on the year because they get liquidated for tax credit purposes. Cut your losses, take the tax credit, hold your gainers, and if you take a profit at the beginning of the new year, you defer your taxes into April of 2016. So there is some seasonal rhyme and reason for what we look for in why we see a little bit of a sell-off in December, because they're selling the dogs. And we see this January effect or the Santa Claus rally take off, and you'll see small caps, growth stocks tend to outperform during this time of year. But what we want to also focus in on is this end of third week of January typical liquidation. People, the pension fund money comes into the new year, and all of a sudden what happens? Year after year, we typically get that late January sell-off where people now have said, I'm going to ride the market as much as I can, and then, okay, now let's take a little bit of a profit. So there are some seasonal events that take place. This is kind of exciting because I know it's the end of October and Halloween's coming, but boy, man, we've got some big-time seasonal fluctuations that come into the pension fund world of the stock market, and this year is a dog race like no other, because so many large funds, Janus, Templeton, etc., they're all chasing performance right now. And so, there's a lot of money on the sidelines. Wealth management people may not be in the game, but I'll tell you what, you watch that seasonal trend of the market, because it has been very instrumental, especially the sea of change for tax purposes that come out. What has that got to do with the Commitment of Traders report? Everything. If we find if we get an early December break, the small specs are short, watch for that upside. If you find out in January, when we get that strong seasonal tendency for the market to move lower, that small specs reversed and went long, you're going to get that little profit-taking breakdown. Those are two time periods that you don't have to day trade. You don't have to watch for the market on a swing trade and lose sight of this stuff. You can pay attention and write this down on a calendar and say, pay attention to this, and this is a great time to look for a contrarian trade. And what is the best indicator for that contrarian trade? The CFTC Commitment of Traders report. Now, we have a little thing that's going on now in the stock market, like transportation stocks. So, we all know about UPS and FedEx, and they're going to be, busy shipping stuff for the holidays. But boy, I'll tell you what, rails, airlines, etc., and I know people are going back and forth of whether they should be going up because of Ebola or down, but really it's not until the beginning or the third week, that December, that we bottom out and we see that real significant move. It's like the best time of the year to be buying some of those transportation stocks is right here in that first week of December. So I bring this to your attention because that might have, as far as a sector and the right stock or right stocks to be in the market, what's the best performing. And I understand it's several, you think about December, my God, let's just get through this week. No, prepare, learn, start to focus, and then you can save up some money and devote it to specific sectors, and therefore you can take a trade and be in a properly positioned trade. I think that is why we look at, if the specs are short the S&Ps, watch the transportation stocks, because they have not just a seasonal upturn, they have their annual lows the market makes, right? The annual lows. And then the rest of the year, God, they chop back and forth. Another one that we want to focus in on right now, And I'm giving you stuff right now. What is some of the best stuff we want to look at? Monsanto, Dow Chemical, Freeport-McMoRan. I mean, some of these in the materials sector in the XLB, I'm giving you the top 10 names that are in XLB. But look, let's eliminate some of the precious metals like the miners like Newmont and Freeport-McMoRan. But look at Monsanto, right? And look at Mosaic. Ag stocks. So maybe we could get a little bit of upside. Is the best seasonal time to be in those stocks tend to be right now. And then you get another leg March through May in some of the materials. Materials sector is probably one of the most aggressive time periods to be long is right now. So I just thought I'd point that one out to you. All right. Next. Industrials, not too shabby at this point in time. Well, that makes sense because in the XLI sector, the industrial sectors, UPS. Didn't I just mention UPS? UPS is in the industrials. Their delivery. They're going to be busy in the holidays delivering stuff. So if you there may not be as much deliveries from Amazon because, but they're getting smacked in after hours. But I like Amazon. Or I like the peripheral business because people will more than likely order from Amazon and wanted less travel. Amazon's down because, listen, there's more ordering in Amazon for the holidays than there are in this time period. In this quarter right here, from August, September, this is a weak quarter anyway for that sector. So anyway, there's some great buying opportunities that are coming up, and some of these industrial stocks like John Deere is in the ag space. You get a double whammy, ag as well as industrial. So there are some stocks that we want to follow and look for. Now, crude oil, everyone's talking about this big weakness in crude oil, and it's kind of like, well, the funny thing is, some years with seasonal analysis, some years you get bigger down drafts than others. The funny thing is we are in the weakest time frame of the year, the weakest, the worst time to be buying energy stocks is right now. There are no hurricanes in the Gulf, dismantling the rigs and refineries, right? So whether there is a supply disruption in the Middle East or not, that's different altogether. But on average, through history, the life of history that we've been using futures, and that's why it's important to look at some of this stuff that we get from the futures industry. This is not the greatest time to be looking at long positions in crude oil. So the best time, and give or take a week or two, is anywhere between the third week of November and the first week of December. And after that, the absolute best time to be long the energy complex, fossil fuel, is the first week of February. Does that mean you can't be exposed to the energy? No, but it shouldn't be a surprise that if the market has a period of weakness, wouldn't it behoove you to stay focused on the strong sectors and the stocks within that sector? And that's why I just wanted to share with you, two things. If crude oil continues down and they say, hey, a weaker crude oil market is good for the economy, it's true, but we'll always get a little screwed in the market when? Right before the holidays, because the pumps go up. And so there's a little, right before the second week of November, there is a little reprieve where we see a spike in crude oil. But if you do see a middle of November, right before Thanksgiving, when the pump prices go up, before everyone gets in their car and travels to grandmother's house and through the woods and all that, then that would be a rally that might be sold, and watch for that. But I think that if you hear on the news about crude oil, it's an ironic situation. Some traders laugh all the bank. This is not a very strong seasonal approach or time frame for the market. So that is kind of some interesting stuff to look at. Now, on TradeStation, the first thing, and I wanted to point out to you, is the conditional changes of going from a commitment of traders to other exclusive information. One of the tools that we use for stocks is breadth analysis. And what you look on this chart here, and I'm switching gears because I like to look at sector rotational stuff. And we have the NASDAQ Composite Index, we have the Qs, which everyone thinks is more technology, and it's not. There are, of course, technology stocks in the Qs, don't get me wrong, but it's biotech. And also another thing that weighs are some of the other stocks like Costco, Tractor Supply, which had a huge move today, right? And then we have the spiders, the S&P 500. We have the Russell, as represents the growth or small cap stocks. We have the New York Stock Exchange Composite Index, and of course the diamonds, the Dow Jones Industrial Average. This pink line represents the advanced decline comparative ratio line. It subtracts or adds the difference between stocks that advance and decline in each respective stock index. Why do I look at that? Because most platforms only share with you the advanced decline on the NYSE. Dick Arms, the ARMS index, for example, the McClellan oscillator, for example, it reflects the data from the NYSE. Now, I talked about it today, and I'll share it with you guys because I think that's important to share, is the NYSE has over 50% of the stock components built in it are interest rate sensitive stocks, and it also includes bond funds, which are priced in terms of price and not yield. So when you get these periods of times where stocks and bonds run in tandem, an advanced decline that measures a lot of preferred stocks may give you a false sense of strength or a false sense of weakness. So it's important to say, well, if I'm looking at a breadth indicator, I want to find out, did the advanced decline on the Russell, it broke, let's say, for example, because this is a line indicator, you can simply run a trend line and say, did we break a trend line? And did price break down, and did we make newer lows from reference points? Did we break down with a new lower low? When price didn't break down, as you can see, we have this little green bar here, and the next day that red, it broke an old low, and the advanced decline showed that more stocks went down than the index didn't, and all of a sudden the index went down more as well. So the advanced decline can show you relative to be more specific, targeting each individual respective stock index and give me a better sense of the broad breadth rather than a narrow analysis of just looking at the NYSE. So that's kind of important. When I said earlier today I do not use volume histogram, one of the things that I use is a volume tool called On Balance Volume. Now, this is kind of like my professional package. We have these really cool things, and I wanted to introduce you guys to this because for those who have my TradeStation package, I got some exciting news. When we release the update, the refreshed version, and we're working on that right now, I am the only one, and many of you are you should all be TradeStation users if you're in this room. You'll know that TradeStation has strategies and indicators, and they do not have arrows. So look at this, guys. What do you see? You see these cool little arrows. This is Ford, by the way. And this is a lot of indicators that are on here. This is my professional package. You can look at, if I go format analysis techniques, you've got my high closed doji, my low closed doji indicator. You've got the on balance volume with a moving average component. We've got my person histogram. It's a momentum indicator. We have the last conditional change bullish and bearish. And we have my sentiment, pivots, all kinds of incredible information that gives us what the predicted areas of support. Now this was Ford. Ford gave a buy signal, that's that arrow pointing up, and the orange candle signifies that it's not just a buy signal, but it was a high closed doji, and this light green was monthly support. So Ford gave a buy signal at monthly support. We already noticed that, by the way, which is really cool, and you can see this on the videos. As price was moving lower, look what was happening with the momentum indicator. It's moving higher. So it was showing bullish convergence. Now all we're doing is waiting for a buy signal to get in on the long side of Ford, which we got. And so we can run scans for those buy signals. Oh, that's what those buy signals are. But for the TradeStation users, what's really absolutely cool is we are the only ones, to my knowledge, as of right this second, that have arrows pointing up and down as a bullish and bearish momentum indicator. So the scans, the first thing that we have for our packages, show me how many stocks have generated a daily buy signal when they're in a weekly buy mode. Now, as you can see here, I ran this at 418 today as of the close, and we only have CareFusion, Coach, John Deere, which is been in a weekly buy as of last week. It had a buy signal today in a weekly buy mode. And I would suggest that we will probably see a pullback, and one reason is part of our teachings. If you note here, look at the on-balance volume indicator. While prices have been moving up in John Deere, guess what? There's no accumulation of volume going with it. So remember, we do get a snapback over time in the next 2 weeks in this sector, and I'm going to tell you, this would be exciting, not to be a buyer here yet, but it's going to be exciting to see John Deere as a trade that I think in time, since it's come off its highs of near 95, we probably get the market back down near 80 or so as we are looking for more upside in the stock, but I wouldn't chase it because there's not enough volume in there. Anyway, our indicators, here's one, how many stocks are generating a daily buy signal at monthly support. And as of today's close, there weren't that many. Joy Global, Flowserve, Fluor, and we need to check this little list out, compare it against what earnings are coming out. But here's another one that's kind of cool as far as Joy Global. I mean, I know that's probably one that's not been in the news at all, but Joy Global has a better constructive makeup of on-balance volume, showing it's broken out of a moving average. Volume looks like it's healthy. It's against support. And this is one that in time we generate, if we get a weekly buy signal and we clear this overhead resistance, Joy Global could see, as it is in that material sector, right, industrial material sector, it's entering a seasonally strong period of time. So that's what I want to focus in on, what we were teaching you today and how we use these scans to find out what's generating buy signals, what's generating sell signals. Now, a couple little things I want to share with you in hindsight. Tractor Supply Company, TSCO. Now, we talked about this in our trading room yesterday, and I was looking for an option strategy to play earnings. And I don't know, you guys can remind me, but I believe I just didn't see an advantage. We had a buy signal, a high closed doji, the buyer, it was against monthly support. The on-balance volume had broken out. The on-balance volume on the weekly broke out. But the big problem I had was there's no option. It wasn't really an optional trade, so we didn't take it. One trade we did take, QLGC. Now this is what's really cool, is if you notice, and this is a trade we did for earnings. We bought the January 10 calls on QLogic for 45 cents. It was pathetic. I mean, it was so cheap. But we had an incredible, if you look at the volume construction here, what got us into the trade, number one, we had a high closed doji and a buy signal at monthly support. That was one. But right before earnings, what really looked cool was the on-balance volume was trending up. The weekly was trending up, and the stock hadn't moved. So it showed accumulation of positions. Well, earnings came out, and they not only beat, but what they did is they said, oh, by the way, we're going to implement a stock buyback program. So somebody knew that, and it did show up as the results are shown with the on-balance volume. And that's why we have that tool to use. So there are some incredible tools, and here, when we take a look at my actual page, you'll see a couple little things like these flashings. What this means is that, like for example, this is low. It's in consumer discretionary. It's flashing that if we close here on a weekly basis, it's going to generate, it's warning us that it's at a threshold that will generate a weekly buy signal. It's Amazon is obviously flashing. It was in a weekly, as you can see, this is my weekly indicators on a radar just the simple little radar screen that TradeStation has. It's color-coded that I can now do a couple really cool things. It's saying Amazon, which is now down $35 in the after hours, it's generating a daily bearish sell signal. Well, no joke, but it's been in a weekly. See, Amazon, it's been in a weekly bearish downtrend. It's been in a monthly downtrend. Do you see the monthly here? So if I can teach people how to use this, what's really cool is there's a couple things. A, when's the best time of the year to buy Amazon? What does Amazon's construction makeup look like, right? And if we take a look at Amazon, and I go back over here to our scanner, I'm going to just type in Amazon. I don't know if this AMZM. If you take a look at Amazon, well, first and foremost thing is, as the stock started to move up the last couple days, you can see the arrow here is in a sell mode. It's been in a sell mode, right? It was at monthly support. But boy, that sell signal, the on-balance volume, most of you students of ours at Trading Triggers know that that's not a very good makeup. This looks completely different than QLogic, didn't it? And so looking at this stock on a daily basis, all right, it's coming into earnings, but this could be just a little short covering. The longer term trend is not looking good. I mean, the on-balance volume is supporting this downdraft in price and the indicator which was pointing as a sell signal. So this is a stock, even from a perspective of a trade opportunity, our trading room would not have done. The trend is down, the on-balance volume, this daily chart would not reflect a very good candidate. Now, that's the key of being selective. So what's the good news? Well, the good news is, if I expand this up, the good news is, the funny thing is, we might now repeat. Just to give you an idea, we have a 270 target. See this number 270? That is, and I'll share with you a format analysis. That is the predicted, as you can see, JP Person, the quarterly pivot. So the quarterly pivot is targeting near 270. So here's the gig. Here's what we're going to watch for tomorrow, by the way, on Amazon. This is exciting. So if we take out this low, if you take out this area, this is and we're going to, because it already has. But if it closes below this level, and if we're near 270, and at the end of the day, at the end of the week, which is tomorrow, if the on-balance volume does not make a newer low and take out the April low, all this really means is this was a sucker's flush. And I would be looking at some bullish strategies on Amazon if we get near 270. And again, the condition is the on-balance volume has to be, if the market closes somewhere here, and I've drawn too many arrows, I don't want to confuse you, but if the market closes somewhere below that low, but we do not get a new closing low relative. Notice here, we had that week was that low, this week was this low. So it was showing on a short-term basis a little bit of bullish convergence, and then we got a buy signal, and then Amazon went up. My analysis of what we teach would share with us that if this low is violated, which it is, and we're down near 270, and we close there, but this on-balance volume reading is not lower than this point from that low, then we have bullish convergence in Amazon, and then I would be looking for a trade to the upside. That's if we get it, going into the January option expiration. Anyway, that's just my stuff. When odds favor, I'll probably tweet that out. But the trading system that we have for looking at these reversals, not only can you look at the futures, you could look at the Forex, the equities, and then just what I've done is the top-down approach. Note that we've got the top stocks in the sectors, like consumer discretionary, and you can see that every stock has been, trend status means has been in a buy, okay, over the last couple days. And then a reversal means that it's going to change that buy signal. already we've got Nike in a weekly uptrend. Nike, by the way, not been in just a weekly buy, but it's in a monthly buy, as you can see here. So we break it down with our charts. It's in a monthly buy, it's in a weekly buy, it's in a daily buy, and then we can kind of gauge whether or not, if you understand where has a stock come from, like Nike's been from 50 and it's at right now, Nike is currently trading at 90. I mean, it's come from 50, it's at 90. What's left in the trade? I don't know. Are there better opportunities? That's what this whole trading system package is all about, if I teach you to use it right. It lists beautifully monthly pivot. If I want to look at buying a stock like Ford, I immediately can take a look at this number and say, if I buy it at 1439, the support is 1234, resistance is 1695. Watch this. I am approximately 14% away from resistance. I am 8% away from target support. So I can say, gee, if I buy it here and it goes there, I got a whale of a profit. And if it takes out the monthly support again, I know what my percentage of potential risk is. So I can immediately identify in terms of price as well as percentage of a stock trading opportunity what the condition is, what the direction is. That's why I don't have a lot of charts here. It's pretty cool stuff. Anyway, that is what we have and how we utilize not just Person's pivots, but also how we use a top-down approach and the specific tools that I use. So with that said, on an intraday basis, so equities, you want a 15-minute, this is the 15-minute chart on an intraday basis. So if you look at the interval, it says 15-minute. So these indicators are based on, as you can see here, not the daily. This is the dailies. This would be if it's in a daily buy signal. So let's take a look at John Deere. John Deere had been yesterday in a daily buy. And now I can look at, if the market gives me a daily buy signal, then I want to look for 15-minute buy signals. So here is a 15-minute buy signals. The daily Person's pivots, this is John Deere, as you can see, highlights what the potential range and what the resistance is. So if you get a 15-minute buy signal and you go, well, gee whiz, I'm going to be buying this stock at near 85 and resistance is 85.18, I might not get a lot out of that trade today, right? Just like with futures, if you take a look at what we were talking about futures and on the soybeans today. Well, this is pretty cool. So with soybeans, we did a big thing about soybeans, how bullish, the public is shortest ever. I mean, I came in this morning and talked about the soybeans, and all you have to do if you trade and you want to do your own trading, what's really cool, it's ridiculous actually in hindsight, but look at the Person's pivots package. Defined what the potential range would be, what the condition of the market is, and then we had these nice little signals, right? So we had a buy signal that occurred right here at 8:30, and it did nothing but trend higher. And the funny thing is, look what the highlighted pivot resistance showed for today's high, 990. In the final minutes, of course, soybeans went, through that level. Now it's just a matter of how do you trade this? Do you take a breakout of a swing high? Do you go with, while it's in a daily buy, a 15-minute buy? Maybe we want to look for taking buy signals on a 5-minute basis. So the 5-minute. So how do we utilize this? Obviously, you could buy it until the market gets near pivot resistance and then stop buying. So there's a lot that we can teach you of how to trade this thing effectively, both intraday, end of day, as well as scanning for stock opportunities and what these indicators are all about. So this is looking even at crude oil, and it's a little bit choppy in here right now, but I got news for you. With the seasonal tendencies, it may remain choppy and back and forth, and that's just how we are looking, using seasonal analysis and combining everything to help identify the right stock in the right area. So with that said, that concludes today's session. I went way overboard. I apologize. But if you are interested in learning more, I want to offer you guys, if you're interested, in an exclusive course about what I'm about, number one. Number two, how to get the information if you want to see some of our courses and materials, as well as what we have to offer individuals for TradeStation. So with that said, may I take the liberty of sharing with you, if I may. Go through here and get my let's see where it is. Get this teed up for you. Give me 2 more seconds. I'm sorry for the delay, and this is being recorded, so we have an incredible special for you guys, and I think one of the things that you can look at is we're going to send you guys an introduction for a very special package. And the package that you can look at, if you're interested, is in some information here. Number one, we have 2 very powerful situations that I would like to introduce you to. A 2-month trial of my advanced trading system indicators. So for $487, this is a way to get introduced to our methodology. Now, normally, to have a 2-month trial of my trading room is been, and the reason this is special is that this is reserved and has been reserved for our Trading Trigger University students. Those have gone through an extensive course, an online trading course of A to Z on trading in the markets. And we have, so when we talk in the trading room, people have obvious experience and have training. We will have you be able to attend my exclusive trading room, and you may make a course of your choice, either my Stock Simplified or my Options Trading course. You decide. So you get a 2-month trial of my Advanced Trading System Indicator. You get, of course, my 2-month trial of my live trading room. And you get, of course, your choice of either my Stock Simplified or Options Training if you're interested. If you want, you can also look at my Professional Traders System Indicator package, complete with the scans and everything else that I've offered and talking about. It's important to know, and we don't have the time to go through it, but how to trail stops using my last conditional change. And that is taught both in my options trading course as well as my Stock Simplified course. My high close, low close doji patterns, which was pretty cool, something we tweeted out today on a little day trade for the E-mini S&Ps about selling based on a little day trade here at the highs, as we had and it was actually a 3-minute low close doji, kind of a cool thing. Well, this is everything if you're interested besides my radar screen with the daily, weekly, monthly, quarterly pivots. If you're interested in that, simply you can do 2 things. You can call our office, 800-655-1881, and that's the number right down there. It's kind of hard to see, 655-1881, or you can email us at info@personsplanet.com, sonia@personsplanet.com, or just reply in an email. Hey, I'd be interested in learning more about this. That is how you can find out more information if you're interested in our events and of course, our information package that's available on TradeStation. I want to say I hope you got a lot out of today's presentation, the tools that we can use, the tools that I use, a little introduction on what I do. Also, feel free to, by all stretch of the imagination, visit our website. There's just an incredible amount of information there. If you go over to our homepage, once again, I put out what I think once a week. You can look at this. We send this out to people. You can actually, this is a blog. It's an article. If you go over here and you look at maybe even the 22nd of October, we start off with a daily positive thought. We talk about what the markets are doing. I talk about the daily McClellan oscillator and what we're looking for in a correction. I give out seasonal trends of the market, potential swing trades. If we get a close below 1983 and a quarter, there you go. It's a close below that level is going to mark more downside. Stocks to watch. We have bullish. We had obviously more bearish. We also give you the week in advance of what the reports are and, of course, what earnings are out. So you can kind of read this little blog that we put out every week and, this week as well of what we're looking for. And it's a nice report so that you're prepared with what's coming out. And, of course, tomorrow we have Ann Taylor and BMY, Bristol Myers. Is it Bristol? Yes, Bristol Myers. Cabot Energy, Colgate, Delphi, Ford's coming out tomorrow. So UPS is coming out tomorrow. So it's a great little thing that we have exclusive for anyone that wants to use and find out more about TradeStation software and indicators. Come into my website. You can obviously get a lot of information just by looking at to see if it's something that you think can help you. I know it can help you. And, by joining our trading room and by taking us up on that offer, I think you're going to find a lot of other traders that are similar in your experiences or learning curves, as well as listening to how other people are using the methodology and improving their trading. I want to say thank you all very much for attending. I hope you got a lot out of today's presentation. And again, I hope to see you in our trading room. Take advantage of this incredible offer. You guys, thank you so much for being here and spending time with me today. Thank you.